Thanks for joining us. I'm Marlon Bowling with you on a Tuesday, watching your ag commodity trade, and this time joined by Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Brian, we have some brand new information just came out, and it's weird because it came out on Tuesday. It normally comes out on Monday, but because there was no trade yesterday, no government office is open, we get it today. It's our weekly export inspections numbers, and we have them for everyone right now. And let's take a look. On the corn this past week, we inspected for export 1.71 million tons. That compares to 1.55 million the week before, and a year ago I was looking back there and it said 1.19 million, so we far outperformed that. On the sorghum this time around, 25,843 tons. That compares to the week before when we had 9,360. And a year ago, that was 121,000, just for a point of reference. Meanwhile, soybean export inspections were 576,406 last week. And that compares to the previous week at 906,000. We had the total a year ago at 351,000. So in between those two. On the wheat, 431,239. The previous week was 349,500. And a year ago, that number was 605,500. So kind of a mixed influence, I guess, on the export inspections numbers. I would guess maybe the trade is just going to shrug that off today.
It's kind of how it looks here so far in the trade activity, Marlon. Good morning. We're seeing the wheat market really sharply higher here, and that's the way it should be. The winter wheat crop is in that head stage, so it's trying to reproduce, and with the hot and dry weather, it's going to limit the yields that we're going to see, and that is giving us strength in that Kansas City winter wheat contract. We expect that would be the one that's going to continue to try and move its way higher if we're going to push everything higher until we get in corn into its reproductive stage or Minneapolis wheat. Then at that point, the leadership role can shift over to those commodities.
Well, this is a market that is almost taking no prisoners today. We have July KC. We had a high overnight of 574 3/4. And then a low this morning of 563 after the open, and now we're back up at 571.5. Now we're up 7.5. Let's back up to Chicago wheat here and see what it's doing. We have July now trading 3 3/4 higher at 546 3/4. Similar action there, sharply higher and then lower, and now back kind of in the middle. Now in the Minneapolis wheat on the spring wheat trade, we have the July contract down 4.5. We're at 639 3/4. From what I understand, there's another chance of a round of showers moving into the northern plains by the end of the week. That would be helpful to the young crop up there. Let's go back to the corn and soybeans here. And on the corn market so far this morning, we have July now down 3/4 at 405 1/4. Things have quieted down after a stronger trade last night. In the soybean trade, we have the July contract on the soybeans now trading just 1/4 cent lower at 1041 1/4. So here again, we took a nosedive after a sharply higher trade overnight, and now we're back about 9 cents off of that earlier low this morning. So equilibrium has apparently come back into the grain trade. We did have a large overnight sale here, by the way, on corn. And it was a fairly significant number, 231,248 tons of corn. It was sold to unknown destinations, most of it for the new crop delivery. And of course, unknown. We'll have to wait and find out who actually bought that coming up in a few days. All right, Brian, we'll come back in just a moment. I want to get your analysis on what we're seeing developing in our cattle and hog markets today. We'll have all that when we come back. Let's carry on our conversation with Brian Hoops of Midwest Market Solutions in Springfield, Missouri. We'll talk about our livestock trade right now, beginning with the live cattle board. And on the live cattle trade in Chicago, we opened up and we have been trading kind of mixed today. And right now, June live cattle are down 37. We're at 104.08 per hundredweight, right in the middle of our trading range. We have August down 25 at 101.68. And we have October 20 lower at 105.28. Now, on the other hand, you had the feeder cattle market surging ahead today with gains of over $1. And we have the nearbys hanging on to that level. We have August up $1.30 at 144.80, and you have September up $1.38 at 144.45. However, it has come off of its earlier highs by about 80 cents or so. So it seems like things are starting to get a little easier here in the cattle complex, Brian.
Yeah, one of the positive things for this cattle market is a discount to the cash, but it looks like cash is working its way lower. Another positive is the extreme heat we've seen throughout the plains. That is going to cut into the weight gain of cattle and keep weights down. and that is a longer term, a friendly item as well. So there's a couple positive items here, but we are seeing weakness in the futures. Trade is expecting that cash trade, once it develops, is going to be at lower money, similar to the last couple of weeks.
Now, are you surprised to see feeder cattle trading as strong as they are? This is actually, if it hangs on to this will be 2 trading days in a row. When you have the corn market actually just kind of holding its own, a lot of times it will surge when the corn market goes down, but that's not going on today.
Yeah, it's really not. The feeder cattle had an outside day reversal, kind of a bullish move on Friday. And it's trying to follow through this morning, having a tough time sustaining any gains, especially with live cattle trading lower. So we're going to give back some of those gains that we saw from Friday's trade. And it just looks like this market here wants to move higher, unable to really do so. We just don't have enough positive fundamentals out there to sustain a rally in the live cattle or the feeders.
What about the lean hogs today? Let's take a look at our lean hog futures. As they stand right now, we have the nearby contract. That would be your June lean hogs. They're trading 22 higher. But you have July gaining $2.02 right now. We're trading at 78.92, and that's within about 60 cents of our high of the day. Big move higher in the lean hog trade. Do you think that has proven it has found a bottom, or do you consider that to still be in a sideways market?
Yeah, you look at the July contract, looks like a double bottom to me at about 75.15. We're getting some buying interest off of that double bottom. We took out the highs that we had from the middle of May with today's trade. Now, there's a big gap on the charts. I think we're destined to go fill that. That's about $1 higher from where we're currently trading. That's my first objective on this July futures. I think if we get a little bit of a rally, that'll be kind of a pre-summer type rally as we expect better demand trends, but it also should give producers, if you're looking at deferred contracts, that October, December contract, those are the ones that want to be focused on doing some hedging.
Okay, Brian, thanks for all the information today. Excellent to visit with you, and wish you all the best this week on a very short trading week. Brian Hoops is with Midwest Market Solutions. He's based in Springfield, Missouri.